The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, market days, 11 o'clock till noon Eastern Time. Most importantly, today being Wednesday, the 16th of July, we are mid-month. And so far, mid-month, done very nicely in the market. New all-time high today again in the Dow. And even more importantly than that, I consider this to be a very important session because of in the Chapman wave methodology. What we're looking at is how we're looking at right now. And I've done that all by you. But first, every day, every time we look at the markets, I start off with the E-minis. This is the S&P E-mini. And the count that I've got now is F/B. One of the reasons why it's not just B, even though there was a very nice takeoff for the 1958 low that hit exactly the 200 period exponential moving average in the 120-minute chart, most importantly, it is the manner in which we spiked to the upside, the manner in which from yesterday afternoon after the close, Intel came out, IBM had news that spiked their stocks higher. I wanted to see what would happen by mid-session today, especially towards the close. Is this the culmination of at least a shorter-term move that's taken us to D or E in the shorter-term time frames, the daily time frames? And then we will assess to see what's happening after that. Let's do this. I want to show you here, and I did this when I did Tom's show, when I was the guest host of Tom's show last night. I showed this pattern here with the E-mini, that there's resistance, there's a downtrend line, slight downtrend line made up of lower highs and much lower lows, and I call that the axe formation. Basically, that's the handle on the left side, and then the blade opens out. It's an expanding cone-shaped blade, and it opens out. Now, when I'm looking at this, I'm saying, hey, there are so many trend lines to the upside as support. You've got, for instance, let's take it tomorrow. Wherever we close, it doesn't matter, but we take it tomorrow. You've got 1965.90. as the next trend line support. That's about, what did I say, 65. So there's 13 points from here to the downside. Then you've got all the way down at 1961. You've got that red trend line. A break of that says watch out, because that Chapman wave Roman candle of the 10th of July, that's where it opens at a particular point based on the close of the previous day. It only makes a fraction, little tiny wick, plummets very sharply low, and then closes about 50% of the entire wick into, and that's the body of the candle, but it's a red candle. When that occurs at the top, just as it did back on the 8th of July, there's a good chance that if you break halfway into it, start trading there for a little while, you will test the low. So with that in mind, what was needed today, and today is not even 2 hours, an hour and a half old, we needed to see a decisive close, preferably above yesterday's high of 1976.25. Well, went all the way to round number 1978 and then plummeted down, pulled back quite sharply, 6 points. More importantly than that is 1978.25 was the previous high. So now what we've done is we've done a couple of things in the Chapman wave. In my CD introducing the Chapman wave methodology, I talk about the double top formation, the pattern that I call the drop bucket, because it looks like that, you know how when they're doing road repair, you got the backhoe, it comes up and it grabs all the gravel and everything to lift, to hoist it into a truck, a dump truck. So it picks it up and then it just merely drops it, kaplop. And that kaplop is what happens when, having double topped, over the next couple of sessions, there's a move that takes out half of the gain from the low to the high, the lip high that was just made. That says closing around there, there's a real good chance you're going to test the most recent low. That would be 1945.25. Now, even more important than that is that if there's a break to the upside, and by 4 o'clock this afternoon, somehow we've gone back to the high of the day, taken it out, even and made a new recovery high. Now, I've got this written as E/A. I was anticipating something, so I shouldn't do that. This is still a gray A. In other words, let me get rid of that. Until it goes to 1978.50, this is still subordinate to that peak D that was made. So this is really only leg A, and as I say, calling it a gray A, because if it breaks above in this move now, then I'm going to be able to put E/A because it picks up the previous peak. I don't want to make that sound too complicated, but if you go through it with me, as I point and as I explain it, I think that'll make it much clearer. And now the stochastics at 73%, better than it was just the other day at 59%, but that's still not very good action. And the MACD is not yet turned to the upside. So if this deflects lower by having a lousy close by the end of the day, that'll say, whoa, be very careful from here, at least for the next day or two. All right? And most importantly, the 120-minute chart at this point, because of those very same reasons I was talking about, that the lack of technical veracity, I just have to keep F/B in mind. All right, enough with this. Let's go to the numbers. The Dow right now is up 40 at 17,101. And I'll do the chart at the same time. So INDU. Actually, it would be nice, a good idea if I bring up the 120-minute chart in background over there. So the 120-minute chart did what I was explaining to my subscribers on my opening call this morning. It did get to that leg D by sneaking 1 penny above the 17,120.2. I can't remember if it was 32 or was it 32.34 high of yesterday, and going to a high today of 17,138.81. I'm going to show you another pattern in a few minutes. Let me just do that now because it's really important to know what I'm looking at and why I'm looking at it and why we want to take the positions that we've been taking in my opening call. So there it is. There's the trend line that I was looking at in the Dow. I'm actually looking at the Dow Diamonds right now, but it's the same thesis. And what happened is that up channel resistance that had popped over going to 171.13 is now under it. If there's any move in the next 2 days below 170.24, the 9-period moving average, that says be real careful. We could have made a short-term top, just a short term. I'm going step by step here. Let me move this away and show you the Dow charts that I featured for my subscribers every day. So this is the Dow chart. Here in the little rectangle is all the commentary, plus this further commentary. But most importantly, what I was saying is that this sub-channel could take over as the lead, and that's what we've got to be a little careful of, because if it breaks and closes above the sub-channel, and if it closes above this dashed gray line here, which at this particular point is at 17,123.62, we went 2 points higher than that. Now we're underneath it. This is a very important session as far as I'm concerned. Why? Look at these U-shaped patterns where you go from an all-time high of 16,970 in the Dow on the 9th of June, pull back to 16,703, and in 9 sessions you make a cup formation to a new all-time high at 16,978 on the 20th of June. Pull back to 16,746 within the up channel in the green line. That's what I call the inside track buy zone, propellant zone. And in 9 days exactly, you go to an all-time high of 17,074 on the 3rd of July. Now look what happens. Pulls back and goes 1, 2, 3, 4. Tests the outside support level of that red up channel support. Goes into the down channel's final support right there. It makes a little right in the crux there. It turns around and it goes 1, 2, 3, 4. 5, 6 days of breakout to an all-time high. 7th day is the long-legged doji. I have a specific technique that I talk about with these long-legged dojis. And today we've gone above it, but we haven't yet closed above 17,120 and was it 0.34. And this is very important. The MACD is improving a little bit, but the beta, the distance between the fast-moving average and the slow-moving average, is not very big at this particular point. It is positive, but it isn't big enough to say, hey, we're going straight to the 17,138 area, which is the next big area of resistance. 17,138 is what we hit. It's the next area of resistance is right there, 17,197. So the day is young, and I just wanted to show how all these little parts fit together. Now let's have a look at the VIX index. The VIX index plummets. It goes down to 10.50. 10.50, wow. 10.59. That is really something. That is now leg C, and instead of the cup formation, it's making an arch formation. That, to me, is a positive aspect now because it's buying pressure. So we're going to be watching this, and as I say, we've got the D, leg D, in the 120-minute chart. You've slightly broken out in the up channel in this particular chart here of the for the Dow, and 1985s is the high that you need in the S&P, and so far it's only going to 1983.94, lagging somewhat. All right, so we've gone through a chunk of that. Now let me continue with the numbers. The Dow is up 44 at 17,105. The S&P is up just about 6 at 1978. The comp index is up 15, not so good, at 44.32. That's because the IBB, the NASDAQ, and the question of the Jen, yes, I will look at the IBB, and yes, I will look at AMSC for our dinners in a moment. Most importantly, we're looking at gold. The GLD is up 75 cents at 125.29. Gold itself is up 6 at 1303. Had a big smash the last couple of days. Now, the dollar, if you remember yesterday, I spent a lot of time saying, oh, look, the dollar's breaking out in leg C. Well, this is still leg C in the index itself, but it is leg D, possibly peak D, in the 120-minute chart says, hey, you can have a little bit of a breather here, but because the 200-period exponential moving average right there, let me make this, I don't want to make it look too messy. The 200-period exponential moving average at 80.39. If you don't mind, I'll just go to the contract to see there's a divergence between this being leg C in the continuous contract or the index. It's the US dollar index. And look at this. Now you've started leg B, only B, in the September contract, and the stochastics at 64 improving, not that great, but improving. It is rising, and the MACD is showing a wide beta, and you're starting to see volume. Yesterday's volume was very strong for this particular contract. The open interest went to 52,000, and that's nice. I like that because it's expanding. It's above when there was a breakout, and it went to 54,000. This can't be. This has to be more. 52. That's 54. All right. Well, that's fine. Got good volume, and I like this instance. But you need to see the turn air spiked, and it needs to do that quickly. We'll go to bond up for 30 seconds at 137 and 236. Fascinating bond. Quite well, considering what the market's doing. I'll be right back. Basil Chapman, Tiger Technicians Hour.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 50 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. Basil Chapman, Tiger Technicians Hour, and we've got the Dow 40 just stuck in that 40 area. S&P's up 4.46 at 1977. We were talking about bonds. I just wanted to go back to the bonds for 1 second, USU, and then I'll go to the requests. Bonds are acting very well, but they're within a containment area with a high in bonds of 138 and 10/30 seconds. That was the high of the week of the 30th of May, and a low somewhere around 134 to 135, and we're in the kind of midpoint to kind of the upper end of this range. I just want to use the continuous contract for a moment because I've got a lot more information. What's really important about bonds, if this market is going to start to decline, even if it's just short term, I would suspect that bonds, the monthly chart, would start to tackle the high that was made back in May of this year, and that would start, if it goes 1 penny above that high in the my continuous contract, that would be leg C, and the first breakout has to close, of course, above that, but the first breakout that's in a year of this a series of slightly lower highs and much lower lows. So it's within the buy mode of the of the up channel. This is what I call the inside track buy mode. And we're just going to watch it real closely. Why? Because I go to the TLT, same thing, very close to breaking up, but it hasn't broken out yet. In the monthly, the technicals are improving, and the weekly is with that flat MACD right there. It's saying, yeah, you can go higher, but you're not going to go all that much higher. Maybe you could retest the top of the most recent peak at 115 and 0.19, and right now we're at 113.28. That's only 2 points. We can often move 2 points very quickly in the TLT, the iShares Lehman 20-year Treasury Bond Fund Trust. Now, if by Friday afternoon at 4 o'clock, or certainly by Monday, if the TLT is trading at 112 or lower, under the 9-period moving average support of 112.40, that's going to say, uh-oh, bonds are starting to fail. Be a little bit careful. It's still in the trading range, but going down towards the lower end of its range. So I just wanted to get that out the way, and I also wanted to show you a chart of the TLT making yet another W formation with an island reversal. And this island reversal is quite important. Remember, gold, the GCQ14 August contract made an island reversal. Did gold not make an island reversal? Was that the 120-minute chart that we're looking at? No. What made an island reversal the other day? The GLD. The GLD, yes. The GLD made an incredible island reversal the other day. It's trading now at... let me just get this... 125.28, and there's that island reversal, and what a whopper. The last one was the high of 128.26 on the 9th of July, and then it gaps up the next day to 128.49. Next day the low is 128.83, so 128.26, so that's a gap of 50 cents. Yep, is that it? Yep. And then what happens is a huge spike to the downside, leaving that beautiful little island right there. Is that an abandoned? Looks like an abandoned baby by the look of it. No, it doesn't. It's just an island reversal. So, So now let's go to the request. The request was for... I'm going to go backwards just for the moment. AMSC, which is American... superconductor, trading at, I forgot to look at what it's trading at. I was so busy doing the chart over again. Had done this years ago. $1.98, up 37.37. That's 23%. Monthly chart looks just horrible. Had once upon a time made a peak D, second high, the high of June of 2008 at 47.53 was an important high. Makes a V-shaped attempt to try to get back there, going all the way down to the 5 area, or 5 or 7 area. Let's see what it is. 8.22, and then it runs again to 43.95, makes a V-shaped pattern, comes back down, makes that pattern that is the right arm, the right shoulder failure in the Chapman wave, or it's the H pattern right there, fails, takes out the left side low of 24.35 that was made in May of 2010, and in February of 2011, plop, it goes right underneath, and it makes its most recent low, going all the way from the 40s, mid-40s, to the most recent low of $1.25, now in leg A in the monthly, but leg D, all of this in a period of 75 cents, it's gone from a peak A to a B to a C to a D in a cup formation in just since May of this year in the weekly chart, and it's in leg E in the daily. Let's discuss in a minute, see where it should be going to, why it should be going to, where the supports, etc. Basil Chapman, Tiger Technicians Hour, and I'll be back straight after this very important message. Now still up only 44, S&P's up 20.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. This is Basil Chapman. Tiger Technicians now. The Dow still stuck at what tree level? I wonder how long that will last. At 4.51. I'll discuss the market in a moment. Right now, let's just go on with this. The AMSC, which is trading at $2.03, up 42 cents, had a spectacular move. So the question is, if you're long, what do you do now? Or if you're not long, what do you do now? Well, the only way I can see it right now, because it's leg D in the 120-minute chart, leg E, I'm calling it leg E for now, at least in the daily, maybe E/A, but at least I'm calling it E for the big spike up. There must be some news relationship there. And the weekly's in leg D. This is what I'd be doing. I immediately grabbed the chart. I made a rectangle on the 120-minute chart to say that somewhere around 193, This is just a visual, I guess, but we're doing 193 and a little higher than what we are at, for the high of the day, 204. I'm talking about maybe 207 to 210. Somewhere there would be the trading range I'm looking at. Then I immediately went to, and what my thinking was that in the Chapman wave methodology, spikes like this very often give you a flag formation. So you spike up and then you have kind of a rectangle that forms, and within that rectangle on a much shorter time frame you could get a buy signal that goes to a buy mode going A to B to C to D. Well, what we're looking at here is that the 120-minute chart, there it is, too late, I wanted to show it before it happened, went to a leg C, then a peak C, pull back, had a double C. So this is like a C1. Let me just get rid of this. As we're talking, it's starting to explode to the C1 and then a C2, and that invariably leads to a D if the low that is made starts to see a higher low and it starts to bump up against resistance within 30 seconds. Now it's just jumped. So now you've got leg D. So what I wanted to say, and leg D is already at 208, and remember I was saying somewhere around the 207, 213, I think I said area. So what we're looking at right now is that if you're in it, I would say that some part of my position should have a stop, and that stop should be 207 to 190, 17 cents. That's really big. It's about 9%. That's quite a big differential in percentage terms, but you really have no choice. So I would have some part of my position have a little trading stop, maybe a trading stop. The low right now on this bar, the 10-minute bar, is 199. So you can have a trading stop of 10 cents. If it comes back and it goes to 197, you're out of it. At least part of your position, because it's a huge gain percentage-wise, 28%, and it's a huge gain just in just visually. Look at it. So it should be bumping into resistance soon, and keep your core position. Don't even touch that right now, and just use a trading stop on something, because there's news and it's acting fantastically. So that's my look at AMSC, American Superconductor. And I don't want to spend too much time on it. Not too many people are going to jump in now because it's already up so sharply. But if it does pull back, someone text me or give me a quick email if it gets down to 183 to 179 in the next 3 to 4 sessions. And then we'll reassess that. Oh, now it's at 208. Something's going on. Now, my impression right now, one of the reasons we're wanting to start implementing the shorts and adding to shorts is... let me do this. I just want to see if I've forgotten anything here. Oh, yeah, I did want to mention Intel, INTC. I think there's almost the same, the same aspect. This is leg F in the 120-minute chart, possibly peak F coming up. And I would there again, I'd go to the 10-minute chart, and I'd say, okay, Mr. 10-minute chart, Mr. 10-minute chart, tell me, what can I do? Well, there's an inside buy signal that's going on here, probably in the 3-minute chart, and the whole. Oh, I just did it as I'm speaking. 33.95 was the high. If it took it out, it's making it a rising base, and that says that the whole area in the next day and a half to monitor will be 33.43. It's at 33.86 right now. If it takes out 33.43 because of market conditions or anything, then I'd be a little bit. I'd be a little nervous because the gap low is 33.95. But meantime, back at the range, this is a huge leg D in the daily. It's a huge leg F in the 120-minute chart. It's a huge leg D in the weekly, and the monthly has gone to. I spoke about this yesterday. The monthly has gone to. Did I not do that? Oh, 32 to the highs that were made back in 2004 at 34.60. It's just underneath that right now. So that's remarkable. And the SMHs, that's the market vectors semiconductor ETF, is spiked up. It's up 27 cents. 51.15 is the high, and 52, if I recall from yesterday, 51.30 was the high that we were looking at, and then the very next high is 57.99 as resistance. But this high goes to April of 2001. So I'm looking at this and I'm saying, I've been here before when the semiconductors have actually done very well, given a market backdrop that says that the market is looking a little bit tired. That's fascinating because in my memory it sticks. I can't remember offhand. I'll do a study if I can today or tomorrow to recall when it was where the market was kind of wishy-washy and the semiconductors were having a last leg to the upside. So we're going to be watching this closely. Cisco, another Dow stock that's been helping tremendously. Let me just see. 2565, 2565. So this is C/F in the daily, G/C in the weekly. Just fabulous. The old guard are coming back again. 26.49 was the previous peak D back in 2013 in August at 26.49. But if I show you Cisco's chart, look at this. Cisco made a peak F way back in 2007 at 34.24. Now, I think that was pre-split because if I recall correctly, it had split a number of times. Now, I've not renotated this. I should have, but I haven't. Maybe I'll get a chance to do that sometime. So the all-time high was 2000, March of 2000 at 82, round number high. I do think that was a split. I'll put it 82. Amazing how these round numbers came in at the all-time highs for so many of these stocks. And it takes a little dive, just a little dive down to 13.30. And now the most recent rally has got it at new recovery highs or within a dollar at 26.04 right now. 26.49 was the previous peak D. So Cisco's acting very well. What I would say to you is this. If you're holding Cisco long, then I would do the exact same thing as I've been talking about in the other areas. I would be prepared to take a little bit off that you might want to put back on, but it's a kind of a reward for doing so well and holding it and just sitting there with it. But if Cisco takes out 25.47 to 25.31 support in the daily, I say be a little bit careful. Watch the weekly very closely because 24.92 is the 9-period exponential moving average. If it takes that out, I'd say be careful because then Cisco could pull back to 24.50 to 24, and that's going to be the big test in the weekly and the monthly charts. But in the meantime, it's acting beautifully. I would not change my position one iota. You could even think of having rather a trading stop and let it tell you, because if it keeps going higher, you don't want to get out too soon. So a trading stop would be the best thing that I could think of right now. And that stop, probably to be safe, would be at 25.68. So that's what, 30-something cents, 25.68, 25.95, yeah, 25.68, just to take a little bit off to reward yourself. That's all. So those are the questions that I was asked. And I had an email question. Just 1 second. Yeah, and the question was in the volatility index, VIX.X. What do you think will make that volatility index, what would give it a trend change that has sustainability, i.e., what numbers and what chart pattern would you be looking at? The corollary to that is if the VIX, the volatility index, maintains this downward trajectory, where do you think it could go? And all I can say is between 10 and 9 is where it could go. I could go even lower, but 9 is historically, I think once we went to a 9, 9.39 back in December of 2006. So, and that was just about the start of a huge move went to the bank crisis at 89.53. That's not a bad position to have, a tenfold increase in your volatility index. Okay, so the answer to your first question is if I'm looking at the monthly chart, this H pattern that is forming right there has to make some kind of a low, and then speed will be the issue. Within 2 to 3 monthly candles, the volatility index, the VIX, trading at 11.41, down 55, down 4.6%, needs to climb and hold above 20.31, the 200-period moving average, but actually that's not good enough. It needs to get into the 24 area to really turn this market upside down. So you're talking about a huge, something has to happen. We've had a bank crisis. We've had international crises. We've had everything that you can think of. Most importantly, what we haven't had is just a sustained move where sellers come in, push the market down for 3 weeks in a row, and consistently every day take any news as bad news. That's really what's needed. So the volatility index on Friday, that's just 2.5 sessions to go. If it can't take out today the high of this week, which is 12.47, if it's not able to do that, sorry. If the high of this week is 13.23 by this Friday or a week from Friday, then it's just stuck in this range, and this VIX can just remain here. And that's the Fed. Fed is really helping this market tremendously. Every time, like yesterday, intraday, it looked, all of a sudden, we're getting higher highs, higher lows, and then it makes a lower low bar, and then look what happens today. It gives it almost all back. This particular pattern that I'm looking at right now could only become very bullish if the VIX index, which is trading at 11.40, is able to take out 11.70, the 9-period moving average, and hold above it. And it really needs to do it very soon, and it has to do it before 10.20 is hit, because you're talking about being able to garner upside momentum by seeing buying pressure eliminated as selling pressure comes in, and selling pressure has to predominate. So that's what you're looking at. But now, in terms of the rotational correction that I've been talking about, look at GE. GE is having an okay day today. It's up 9 cents waiting for its earnings. I think the earnings on Friday morning. But it isn't really showing any strength, and the weekly chart is still very poor. I looked at it for my subscribers this morning. I said, you know what, we're not doing anything. Let it be our guidance for now, but I don't want to take a position. I don't mind losing it right now because it's really on the cusp of either breaking below 26.40, which would be very negative, or maybe going above 26.85, which would be very positive on the short term. And that would help the weekly chart. But the weekly chart is, this candle is just saying you go down below here, not good. You go up above here, that's good. You can make another cup formation. So then you got IBM. IBM, big news last night. It's up 4.20 today in leg D. This corresponds to the XLK, which is the XLK. Oops. We've got a caller. Sorry. Brent in Martinez, California. Brent, I'm sorry. I didn't see you sitting right there waiting for me. Are you still there?
Oh, of course. It's always a pleasure listening to you, Basil. It's no problem.
Thank you. So you'd like to look at?
Yeah, IBB, I am short from 260, and I would love to get your analysis on a daily and weekly basis, if you could.
Okay, so IBB is the iShares NASDAQ Biotechnology ETF. One of the first times in months and months, and I have to say that we're not even in the short position we were, and we just got taken out, and now it's doing exactly what I wanted it to do. I think it's looking very much like, Tom and Larry and Steve, they all talk about the one-to-one expansion. I'm looking at this, and I'm saying if there is a one-to-one expansion, it's probably going to be the Chapman wave expansion, which says there's a parallel movement in time and price, and that's says that by tomorrow, if the IBB trading at 248.62 down 381 is very weak, and if the market generally turns down, you could see a test of the 243 level where A to B equals C to D, but it would be one of those what I call the Chapman wave time price extension match, and that would go to tomorrow. So that's the way I'd be looking at. Why? Because it's made the pattern that I call the H formation. As you know, you're well aware of that. Comes from 266.43. I call that the head in the stalk Chapman wave stalk leg formation. And then what happens is it makes the beat. The beat comes to 250.34. Has a bit of a bounce to 259.85. And in fact is now gone down from that level to 261. So this is a very sharp move. This is the two ugliest candles that it's had since the actual top of 266.43 short-term top. So I'm looking at this, and I think that based on the pattern, hold on, and I'll cover a little bit more detail. Focus IBB, NASDAQ Biotech, and it got repelled. It's like track was.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Backtech Environmental. For more information, just click the Backtech banner on the front page of TFNN.com.
Everyone, we're back. Dow's up 42, back to that 42-ish area. S&P's up 360, really struggling. It's very selective right now. I want to finish up with Brent. So, Brent, what I'm looking at is that the 120 minutes just broke the left side low of 250.25 in IBB. It's trading at 248.70, down 373. The 120-minute chart, this is this chart that I'm showing right here in the middle, folks, says that the bar that takes out the left side low should be within that bar, or the very next bar should be a retracement back into the arch to test support, to test strength. And if it can't do that, it will be going lower. And at this particular point, it hasn't done it yet. And I'm looking at this and I'm saying that the daily chart is up right on the 50-period exponential moving average. If it closes below that in the 246 or lower area, then all I can say to you that 1-to-1 says that there should be a measured move towards 243, and that would be the first place that can be a really strong bounce. And this is setting a kind of a standard there with the repellent, that inside track, Chapman wave inside track repellent zone at 266.43 says, wow, that is very strong. And the stochastic is at 89% and it's going down. So if the stochastic is to go back into the 70% area, this says that the major support for the IBB next support would be 232 to 230. But I'm not talking about a day. I'm talking about the weekly chart. Hope that helps you.
Very much so does, Basil. I really appreciate you. Have a nice day, okay?
And you too. Thank you so much for calling. Let's go to Dan North Reading. Dan, how are you?
Good. How you doing, Basil?
Very well, thank you.
So we had looked at Carmex a couple of weeks ago, the flag pattern here, and just wondering if you thought I should get out or stick with it.
Okay, so this is very important because the monthly has made a V-shaped pattern in Carmex, KMX, showing again 52.63, up 18 cents. Sort of bumping up against the resistance area in the monthly chart. The weekly is making a potential peak D if it can't take out 53.70, the all-time high. And the daily has gone to a higher high. There's that inside. You remember we were talking about the inside buy mode? And let's see if it worked out. A to B. Yeah. So you're still long?
Yeah, I'm still long.
So then here's my recommendation. Do you have enough to be able to take off some part of your position?
Yeah, I could take some off.
So I'm going to make the recommendation that says you can either take it off here at 52.64 or a point lower at 51.70. If it hits 51.70, I'd be a little bit cautious because it could. This is the rectangle. I already drew it in. It's gone slightly higher and slightly lower, and it should be stuck in this range until it decisively breaks above 53.70. So at least for now, into maybe Friday, options expiration Friday, I'm going to make the suggestion you can take a little bit off right now, which perhaps you want to put back later, but at least take something off to reward yourself for a wonderful position play. And the rest, I'd have a stop on my rest to take off a little bit more if at any point in the next 3 days it takes out 51.20 support. I'd say, okay, be a little careful here. And that particular position, you could actually start to put back if the doji candle of the 25th of June with a low of 49.73, if that holds for 2 weeks, you might want to put it back because there could be another rally. But that's the way I would treat it. And if it does break above 53.70 and you haven't taken off anything else, then I would definitely take something off the moment it takes it out by 1 penny. So I hope that helps you. It's still acting very well, but I think this is a time to be a little bit proactive. Hope that helps you.
Okay. Thank you, Basil.
Thank you for calling, Dan. Now, before we go to Larry Pesavento, Larry's show's coming up now. Trade what you see. I just say, make it real quick. Volatility index, if by the end of the day the volatility index spikes the 11.70 area and the Dow starts to move to minus 20, S&P is minus 3, I'd say be a little careful. We could have some selling into Friday. So, folks, stay tuned for Larry. And don't forget, my service is the opening call. I'll be back tomorrow. Have a great day.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.